Hey, hope you're all doing well out there. This is your January market review. So for those of you that are new to watching this video, the reason that I put this together each month is to give my clients the straightforward information about what's going on in the stock market, the economy, and then ultimately how that affects their investment portfolio that I'm managing for them. So this past month, for the beginning of the year, stocks so far are up a couple percent. A little bit of volatility in there, but overall things have been moving in the right direction. Before I really get into things though, I want to do a little housekeeping here. So for those of you that are clients of mine, we're coming into tax time right now, and I've gotten a number of you that have already reached out about 1099 forms. That's your tax documents that if you have a traditional IRA that you've withdrawn money from, or if you have a taxable account, which I refer to a lot of the times as a middle bucket, you'll get a 1099 form for those accounts. If there's been any taxable events like withdrawing from a traditional IRA, or dividends, capital gains, interest in a taxable account. So if you don't have a taxable account and you didn't make any withdrawals from your traditional IRA, you're not going to be getting a 1099 form. For those of you that are, I'm going to show you where you can find them, and for those of you that eventually will take money from your IRAs, or we have a taxable account in the future, this will just be good info for you as well. So I'm going to bring this up. This is in the client portal. So this is the client portal you can find through my website, clientfocusfinancial.com. If you go to the top right of the website, and I'll put some graphics in here to kind of show you, you can click on the client portal there. That'll get you into the login screen there. If you've never logged into there, reach out to me. I can get you set up with it. There was an email sent out originally when you became a client to get you logged into that. If you have gotten into there, you forget your password, just hit the reset password button, and you can go through the prompts to reset your password there. But when you get logged into the client portal, when you're on there, you're going to see on the main screen, it's going to look like this chart, or this graphic here. So what I want you to do is click on the Documents tab. This is where, for anybody that is looking for statements as well, you can find statements in this portal as well. So the Document tab, in there you'll see about 4 different folders. The top one, I have a little yellow dot next to it there that says Tax Forms for Schwab. There's also custodial statements for Schwab in the red, with the red dot next to it. If you're looking for monthly statements, all of you that, if you're watching this video, it was just sent out today, February the 11th. You would have gotten an email notification. Those are for your statements that were uploaded. Tax forms are going to be sent out in 3 waves from Schwab. It's not alphabetical order. I can't tell you exactly what time frame yours is going to be in. I just know that it's going to be sometime before the first week in March. So keep an eye out for that over the next 3 weeks or so. If you're one of these people that are anal about just getting your taxes done and over with, put everything together within your tax returns, whether you're doing it yourself or sending it to your CPA. Get everything in. This will be the last form that you'll end up getting, and plug in that basic information of either the withdrawal for the IRA, or the capital gain, dividend interest, income interest that you made from a taxable account. So super simple, but that's where you're going to find that, is in that client portal there. You can also get it on the Schwab website. All the info that is in the client portal is pulled over from the Schwab website. If you want to do that, go to schwaballiance.com and log in through there, and you'll find that in the Documents tab on there as well. So but if you want a paper copy as well, Schwab doesn't send out paper copies anymore. It's 2025. They're not mailing out everything. It's all online. If you want a paper copy though, you have to reach out to Charles Schwab directly and request a mailed form, a mailed 1099 form to your house, and they'll send that out to you. But they don't do that without your request. So just keep that in mind if you're old school and you want to see that paper copy of things. So for those of you that have never seen a market review that I put together, what I do a lot of times to talk about markets and the economy and portfolios is using a lot of charts. So I have a couple different charts here for you today that I think are very applicable because of where we are in the markets. I use this just because these are some charts that I came across kind of applicable just based on conversations that I've had from a number of different prospective clients, current clients. So when I hear it, more than a few times, I know that there's a number of people out there thinking it at least, or if they're not thinking it, then maybe this is just good information that they'd like to hear. So first chart that I have is a chart showing the S&P 500 and looking at really these time frames where they titled the chart, "The Market is Too High to Invest." This is a chart going all the way back through 1990. In those gray bars going vertically, that's showing recessions. So there's one in 1990, again in 2001, the Great Financial Crisis from 2007 to 2009, and then a little blip in there in 2020. That was actually COVID. So if we look at the line in that's representing the S&P 500 percent rate of return, there's different bars that are kind of highlighted in there of the market being too high. So there's about 6 of them in there. We're currently in one right now, and this is a very just common question that I'm getting is like, well, I don't want to invest, I want to wait for markets to pull back, which inevitably markets will have a pullback, but when and how deep is it going to be? So if we look back in the time frames of like 1995 through 2000, markets were up, and then they pulled back from 2000 through 2002, which really from a time frame perspective didn't bring it back. It brought it below the original high that it went up to, obviously, but it didn't bring it back to where it was in 1995. So again, 2005 through 2007, markets were too high. Then we went through the Great Financial Crisis, pretty extreme time frame to invest any money. That would have been a generational bottom. There's nobody that is under the age of 90 right now that would have seen a worse market time frame to invest. So that's pretty much, I'm guessing, for my 90-year-old clients out there, if you're watching, thanks for tuning in. My guess is my 90-year-old clients probably aren't watching this though. So for most of us that are on here, we've never seen a worse time frame to be investing in stocks. Again, we had another time frame from 2012 through 2015 where markets were too high, and then we went through a little down sideways market for a year. Again, then we had another market too high, so on and so forth. So common thing that I'm hearing is that, well, I want to wait for markets to pull back. So if you're concerned about market drops, there's places that I can put money to be invested with limiting downside risk using options-based investments. These are for those of you that are in IRAs with me that are a little bit more conservative. These are some of the buffered strategies that I use within there. They hedge a market drop of varying percentages. There's tools out there that completely eliminate downside risk of market drops because they have a defined outcome that protects 100% of the drop. So while allowing you to participate with the upside generally somewhere around like 7% over a 12-month time frame. So good alternatives to cash. Also good alternatives if you're very concerned about investing money in the markets and you don't want to just invest money in bonds right now because of potential volatility in bond markets. That's a really good alternative to it. But if you're a long-term investor, it makes a ton of sense to just invest. So, and that brings me to my next chart. The other chart that I have here for this week is it goes over the S&P 500 returns over different time frames, 5-year rolling time frames, 10-year, 10, 15, and 20 years. Sorry, it's small on my piece of paper here. So if we're looking at 5-year rolling time frames, this goes all the way back through, 1960, 1950? Pretty long time frame, and the time frames that we're looking at here is showing, well, how many times was the market up. So it looks like for the 5-year time frame it's up some 82% of the time plus. If we're looking at 10 years, we're at 92, 15 years 100%, 20 years 100%. So the longer you invest, the more likely you are to be in an up market. And there's a lot of concern that people have, especially like from I don't know what it is right now, but long-term investors are very scared to put money to work in markets because we are right near an all-time high. We've pulled back, at different periods about like 2-3%, which, then people are concerned, well, markets are dropping. That's nothing. That's, basically, that's just a normal, regular market fluctuation right around a market high. Not something I'm concerned about, not something you should be concerned about if you're a long-term investor. If you are concerned about it and you're not a long-term, or you are a long-term investor, let's have a deeper conversation to talk about that, just because, if you're a long-term investor, you need to have some money invested within stocks because that's the best asset class to outpace inflation over time, historically speaking. So, but we can talk more specifically about that if you do have deeper questions or concerns about that. So this is a really good, I like this graphic though, just because it depicts really how stocks work over a longer period of time and how time really evens out the fluctuations that you're going to have within timing the market. So perfect example of this would have been, and I talked before when we were looking at that first chart of 2007. So if you would have, in the Great Financial Crisis from 2007 through 2009, if you would have taken a lump sum of money and invested it in 2007 at the very peak of the market at that point, you would have been really hurting about a year and a half later in March of 2009 when the market had dropped a total of about 57% from the peak to the bottom. But if you just held on to that through 2013, you broke even. And if you fast forward through today, you've made with dividends reinvested a 9+% rate of return on your money. So just keeping it invested over time, which on average, stocks make over the last 100 years. The S&P 500's averaged about 10% with dividends reinvested over that time frame. So even picking literally the worst time frame to invest a lump sum of money of the peak of 2007, right before the Great Financial Crisis, you still ended up with pretty much right on average rates of return. I'll pull up the graphic of exactly what that rate of return is from the peak of 2007 through present day. So you can see the annualized rate of return there. I'll have the chart up there. But it's really about the longevity of it. We fast forward at that time frame where we were talking about is 18 years ago now. So it's a pretty long time frame, and it would have been really painful at any point, pretty much within the following 3, 4, 5 years after that, of just leaving the money sit there being invested. But if you're a long-term investor and you have 10, 20 years to work with, and that's even including if you're one of my clients out there that's 60 or 70 years old, that still includes you, because if you plan on living until you're 80 or 90 plus years old, you need to keep at least a portion of the money invested within stocks, because that's the part that's going to outpace inflation over time. So the other more conservative parts, that's where I use a lot of those option-based strategies or some alternative investments to help mitigate some of the risk of the market. But big picture is that stocks long term are going to make more money, and you need to have some portion held within there. Otherwise, you're going to struggle to keep up with inflation over time, especially if you're withdrawing money. So if you have any questions, specifically, don't hesitate, call, text, email. I'll be more than happy to answer any questions for you. If you'd like to do a Zoom meeting, obviously I'm very available for that too. Just reach out to me. I can connect with you via Zoom to talk about your portfolios personally. But if you come across anybody as well that you think would be interested in having a conversation, just get them in touch with me, give them my number, my email, and have them reach out. That's the best way for us to connect. But if we don't connect here over the next month, I appreciate you all taking the time to check me out. Until next time.